Are
Sorry.
you trying to be the jerk? Are you trying to
Just
be
being
the
the
jerk?
jerk. Just being the jerk.
Me?
I'm always the jerk. in these after the bells, I'm always the jerk. and
Steve Martin
I
is
throw
cringing
poo.
I was
somewhere.
about to say that's a great movie.
I was born. Never mind.
Yeah. Were you poor?
I was born.
Oh, there you go.
Josh,
You can
Josh
finish the
almost
line.
lost
yeah.
it.
Okay. Yep. I almost spit out my drink on that one.
I think, Royce, though, you have a lot more rhythm than he did.
I'm hoping.
From the get-go, probably,
It took
too.
years to get here, though.
All right. Let's focus on the show here. He hates those cans. All right. I'm Darren with Arbitrage Trade, and this is After the Bell. It is After the Bell on Wednesday. My guests are not Daniel Hopwood. He got a little sick. I hope he doesn't have the avian Asian flu or whatever it's called this week. We do have our banker, though, JP Morgan, Josh Morgan, aka the bank, and our founder, CEO, Royce Wells, also the one who's the reason we're all here. He created the AI bot named Pips, which is the one that helps us make all these great decisions on the pick of the days.
Yeah, right.
Which you can get Monday through Wednesday. And I review them on Thursdays. All right, that's enough about plugging my show. Let's go to this one. I am the resident retail investor. I'm the one that does throw poo if I don't like what you're saying. So we will keep going. I will give
that was this morning.
I got to come up with some graphic that throws poo at each window. When all right. We are not financial advisors. This is not financial advice. This is information provided surely for educational and or entertainment purposes only. We'd like for it to be both. Please always consult an investment professional before making any financial decisions, and that includes on any show that you see during the week that we put on social media. So let's start off here. It has been a very interesting couple of weeks, I guess. We went from little crash, 10% pullback, to, of course, what we all expected.
Close enough.
Yeah.
Hey,
I'm not. The media is the one that says 10% pullback, so it looks like it's really bad, which is and then it bounces back up, of course, and then it's like everything is getting spread out across the markets, but no, it's not. Here comes NASDAQ, and here comes S&P 500 again, and it's just not really. It's still the Mag 7, no matter what, or the Mag 3 at least right now. That is the question here, though. Is the market recovering? We see it's recovering, but is it a facade? And are we about to flop? I know we kind of cover this every week, but we really need to because it is at the fore, and that's what we need to discuss. What is about to happen in your opinion, banker? And then we'll go to Royce.
I mean, there's a couple of things. Like one of them, it depends on, are you just talking about broadly across the market as a whole? If that's the case, I don't necessarily see us continuing this. It kind of, one of Royce's favorite things is, we went up too much too fast. And typically with these like 8 or 10%, whatever you want to call it, corrections, dips, whatever term you want to use, it takes a little bit of time for us to stably get back to where we were. We've done this in a matter of days. And I realize the sell-offs, they happen quickly. Maybe a little bit of an overreaction from, all of what came out of the Bank of Japan, but we did take a pretty steep tumble there really quickly. And for us to be all the way back up, I think, I didn't check what we closed at, but we got to be nearing 50% recovered already within 6-7 days. That's way too far, way too fast.
It is kind of hard to believe, isn't it? How about you, Royce? What's your take?
Well, I was watching it, and I'm watching really closely because we are, I think, at an inflection point. So a lot of people who are technical analysts, they use different tools like Elliott waves or like the Bollinger Bands or these other tools to basically figure out where. And where we've bounced up to, it's created a lower high, which also looks like an Elliott wave, which means if this is that point where we are going to turn, the end of the week might be a little bit more red than a lot of people would be expecting.
That's funny because obviously Daniel's not here. He's the one that writes most of the show most of the time, and he wanted to point out that we've had a 50% Fibonacci retracement.
Yeah.
Yep.
Yeah. So that's
So
another
lots of resistance
measurement.
where we are, and we got here way too quickly.
Yes.
They didn't pay the bouncer nearly enough.
It doesn't work on dates, and it does not work out in the stock market. Don't
That
go
was
too
just a
quickly or
really
you'll get
fancy way
rejected.
of saying exactly what I said.
That's pretty much. Yes.
Right.
Yes. All right. So let's go ahead and move on then. I mean, I will talk about another different type of Elliott later on. We're going to go on to foreign
Missy
exchange.
Elliott?
Ezekiel.
We're going to have some music for Missy Elliott. Yeah, she's a special guest.
Yeah.
She's going to talk about the industry, the music industry, and where it's going. No. Let's talk a little bit about Bitcoin. It's back below 60. I'm sure it might bounce back and forth because, I mean, that's how people make their money. That's the funds make their money just by like jerking the stocks up and down, the stock market up and down. They're going to do the same with Bitcoin. So what's going on? It's back below 59 or 259 and some change, I think, unless that's changed since close.
Who's the question named that?
Just what's going on? Why is it?
Yeah, but
all
who
the
do you
way
want
up?
to answer first?
Let's go with you, Royce.
Okay.
We'll switch.
All right. We'll switch around. Hey, that's switch around's fair play, right?
Yeah.
So Bitcoin, a lot of
the chart, right?
Yeah. A lot is going on. A lot is going on with Bitcoin. A lot of people have a lot of opinions about what's going on with Bitcoin. Matter of fact, I even saw something going on with Bitcoin just earlier today. On the 30-minute chart that we have for Bitcoin, looks like it's trying to find support on our apocalypse band on a 30-minute time frame. But the question is, it's a little bit early. A lot of people are saying it's a little bit too early for it to be bouncing. They're expecting an early rally and then nothing in October. I'm like, I'm not too sure about that. It did spike up to about 62. The problem that it's basically having is the 30-minute says, yes, it's ready. It basically broke over. But if you look at maybe the 4-hour time frame, the trend top says, yeah, we're not going to make it past that mean line, and we're not going to make it past the RSI line. This is basically at best a dead cat bounce. So it's a little bit scary. And Ethereum is not far behind it. Ethereum is actually in a far worse place than
Right.
Bitcoin. So I'm expecting, and don't quote me on this unless you really want to, about a correction of close to 40% before the end of the year.
Well, here, you know what? So we're going to blow right past that 55 you had.
Yeah,
before,
right?
Okay. I did the math. 40%.
40%. Boom.
Well, you're going to make a lot of millennials unhappy with that comment.
Hey,
but
everyone wants
to
see it
me,
back at about 1600, right?
To me, it's a liquidity thing. They pull from that to put it here, and they put it back there, and then they put it back in the market and back and forth. But I have no proof for that. But that's what we apes do. I think the liquidity is just getting swapped back and forth, and especially that's why you see all the movement on the weekends. You look like you're dying to say something there, banker. So go ahead.
No, it's actually the total opposite. Like we've had such volatility with Bitcoin. I've really been trying to kind of sit on the sidelines and watch and wait, and calculate the opportunities. But it just seems like there's more noise surrounding what and why it's causing this Bitcoin thing, and it's just parallels to overall market, headwinds and noise that's going on. It doesn't really seem to be any one thing that anybody can pinpoint. And you ask 5 different people, you're gonna get 5 different opinions.
100%.
So, like, that's why I'm just kind of looking at, sitting back, watching the charts, looking at technicals, and seeing if there's a decent opportunity for entry. Or but at this point, I've been out of crypto for a minute.
Yeah. That's
basically what Royce was saying, is he's looking at the charts and seeing that as a possibility.
I had very little to add.
Yeah, I've heard some noise, but I'm not going to give any credence. But I'll basically tell you some of the noise I've heard. People are saying that basically the last batch of Bitcoin that's being mined, it's being mined at a rate faster than they're expecting. So that means the halving could actually happen sooner than the May-June timeframe where it normally happens, which is why people are expecting an early rally for Bitcoin if they actually get to that halving event, which is the very last one before it's expected.
Gotcha.
How much is true in that? Who knows? I haven't personally looked at the blockchain. I can actually go take a look, but that's not on this show.
Yeah, I mean, because we talk about it all the time. I mean, Daniel's probably going to be very happy when he watches this back because once again, Bitcoin Applehead was represented one more time. We're not talking about Apple as far as I know.
Yeah, I don't know how we got Bitcoin in here when he's not even here.
I know. He's proud. He's
delete
brainwashed
button.
us, or me anyway, I guess. Let's move on to the second part I was going to talk about, which is Forex, which is what we specialize in. So we're going to bring it up here. There was a report that came out that said that the Forex deposits have jumped 10% in the U.S. and they've reached the highest levels in a year. And that there's a lot happening there, especially with the carry trade that's happening. And I still say there's a huge shoe, probably the heavier shoe, to drop with that. The Swiss franc came up. Frank? Is it Frank? Like Frank and beans? Oh. In the article I read, they also referred to the Swiss franc. So what's that about, Royce? What's going on there?
Well, there's a lot that's going on in the market right now, and this is the primary reason, I guess. If we're going to talk about the pink elephant in the room, right? Japan had a negative interest rate. They have a positive interest rate now. But for years, as in like 3 solid years, people were parking their money there and getting paid to park their money there. And then when Japan raised their interest rate to 0.25, they're like, yeah, all this money, now I need you guys to pay us. And then Japan also did a $22 billion infusion where they basically said, okay, no more US dollars. We're going to cash that into. And Great Britain, yeah, we're going to basically cash that into. Euros, we're going to cash that into. Basically, it's like there's no more free rides. With all that going on, basically because the US dollar is a reserve currency, you've seen a lot of people going, oh, we can't get a return on our money for our country like we were. Okay, let's go back to reliable. Let's go back to the dollar. But just as many people have gone back to the dollar, we've also seen DXY, I said it, fall just a little. Just a little. Right? And we've seen it fall a little. Maybe it's going to fall some more. Who knows? But I have seen Australia and New Zealand getting stronger. Their money versus the dollar has been getting stronger over the last 2 weeks. They also didn't take nearly the haircut that Great Britain took versus the yen, but they definitely did take a haircut over the last 2 to 3 weeks. Right?
Yeah. Just to focus, though. Okay, go ahead.
Yeah. All right. Then you talk about the Swiss franc, right? The Swiss franc.
There we go.
Yeah, hey, I have to build a story, man. Narrative.
I hate narratives. Go ahead.
So as these monies are moving, a lot of people are also a lot of people do lots of business with the Swiss franc, and also with that. I think there is a lot of, just like we have with the regular stock market, there are dark pools where people move money around. A lot of people don't talk about how the foreign exchange market works, but in the foreign exchange market, there's M0 funds, M1 funds, and typically those are never seen. Those are the funds that are basically off ledger for the banks. That's how the banks lend out money to each other, right? So when stuff like that starts to happen, you will see a sudden influx of money going to countries. We're not going to name any countries, but when that happens, that's how they quietly move the money around to get where they want it to be, and basically even out the economies across the world.
Gotcha. The other thing I want to add to that, because it started off just saying that it looks like retail is starting to invest more into Forex, which is a good thing. And then it looks like also that, I guess, Gain Capital was the number one place that people went to put foreign exchange into. And Owanda was number 2. And it looks like Owanda, which we have an affair with Owanda here, is catching it. And it could surpass it pretty soon. So I thought that was kind of exciting news to read about.
Previously, and this is just a little bit of history on Forex, right? Previously, to even have a Forex account, the barriers to entry were obscene. Like, to start an account, you need to have at least $100,000 that you're willing to put in the currency market before they would even let you play. They've relieved us of those boundaries and barriers over the last 10 or 15 years, which has basically allowed common people to actually get involved. And if you know anything about the markets at all, foreign exchange is the biggest market in the world. The US stock market doesn't even, it's like comparing the moon to the sun. It doesn't even, it's a blip. Like, on a daily basis, there's about 300 billion that's traded in the US stock market. Meanwhile, in the foreign exchange market, 7.4 trillion.
Right.
So it's orders of magnitude bigger, but allowing just a common person to be able to play there opens up a lot of opportunities, but it also may make all of the world markets more volatile.
So I'd be remiss if I did not say that that's basically what we do here, and that you go to arbitragetrade.com, and then you can have basically a bot make those decisions for you. You set it, and we play in the foreign exchange here. So if you're curious about it, there's a lot of educational material that's on our site as well. If you don't know anything about it, it's a good introduction. So arbitragetrade.com. See, I keep plugging more and more, Royce.
Yeah, you can absolutely plug it, but also make sure that if you're going there, make sure you read the education or ask. There's a AI bot on the site that you can ask questions to, and basically talk about the risk management settings. Because at the end of the day, it is still your decision to and how your bot trades. So we're not trading it just willy nilly and say, "Hey, take ours and go." Nope, you have the opportunity to tweak your settings and possibly get the best trades that many other people may not be getting. It all depends on how risk averse, or as they say, to the wall you are.
From the windows? Oh, never mind. Cue the music right here. Oh, never mind. We'll get censored.
Canceled again. Third week in a row.
Yeah. Any last words there? Did we cover it all, Mr. Banker? Or
Yeah. Well, I mean,
okay.
Yeah, I've got a couple of points.
All right.
One of the things I thought was interesting when I was looking into this, because I did not realize how neck and neck Oanda and Gain Capital really were. I thought Gain Capital was really still had a much more significant market share, but apparently their inflows have been significantly higher, to the point that you mentioned in the retail space, which I thought was kind of interesting. And so I started thinking about, why that might be. One interesting note is that Oanda quietly put themselves up for sale last week.
Yep, saw that.
And, the parent company CVC just it's very, very quietly put themselves up for sale. They only listed it to a couple of larger buyers that might be interested. It's not like a public thing, there were very few articles on it, period. So I'm interested to see how, if they did, usurp Gain and take over that, that largest market share, how that might affect what they're going to actually ask for it, rather than being number two.
Yeah, last time they were for sale was for about $2 billion.
Yeah, and they've not announced what their asking price is. Like, I couldn't find anything on what the actual numbers were or anything like that. I just thought it was kind of an interesting little tidbit. Yeah. But the other thing is, and you'll enjoy this one, Darren, is that, and this is, let's go tinfoil hat for a second. We always are, we're always in that whole headspace of everything is manipulated and everything is controlled. And you look at like stocks, and they can write some article that's going to drastically shift the waves of money. That's really easy to do when you're talking about like stocks and, publicly traded companies and things like that. When you get into larger, to the point that Royce made, where you're talking about the money is billions versus trillions, and you're not going to be able to really just put out an article and say Japan's economy is collapsing and it's going to move the needle. Yep. So the manipulation is so much less on the foreign exchange market, that the one thing it does benefit, and here's another plug, companies like Arbitrage that use, software, AI, they're going more, traditional investing all bundled around and they're ignoring the noise. Well, the noise is what causes the corruption in these, like, in the markets that we talk about more frequently. But when you get into like foreign exchange, that doesn't move the needle. So all of those platforms that use AI, and you get a guy like, the lowly retail investors that are like, I want to get into investing. They easily latch on to, the programs that make it easier for them to get into it and make it easier for them to actually start making money, and like the PIPS program where you can make money while you sleep. You don't need a ton of money. You just need some money. And since Rwanda and all these foreign exchange have removed those barriers in the same way that like Robinhood brought all of these investors to the stock market, it really makes sense for a lot of retail inflow to happen and for a lot of money to come into Forex, because you can really you can get, bots, and you can get AI, and you can use charts, and you can use things, and you don't have to worry about listening to, Fox News or CNN or what's, Bloomberg or whatever the hell is happening in the world right now, or in on those TV stations, because it doesn't really make a difference.
Now you got all these countries versus funds.
I finally converted Josh. Yes.
You got the world doing the foreign exchange, and you have just funds doing the stock market. So, it is a lot harder. It's a lot bigger thing, like you said. And of course, I'm going to pull this out again real quick. And because I believe the algorithms are tied into the media, so that if something's put out there that's written, an article, whatever it is, it automatically goes into that algorithm. It reads those. So whatever is put out in the media automatically goes into those algorithms, and then adjustments are made. So short and distort works every single time, in my opinion. So that's my little.
I just want to put this out there, as long as we're doing shameless plugs, right?
You watched the show too? No, never mind.
The Friday before that Monday crash, we got a sell signal across the board on almost all of the U.S. stocks. So the fact that it opened up red was no big surprise over here.
Yep. That is the beauty of the algorithm that we use and the AI that we use, and we thank Pips every day. He's kind of a cute little robot too. He's the one that's, if you're looking here at the video, he's the bottom right guy that's kind of giving you the wink. That could also be Daniel sometimes giving the wink. I don't know. But let's go ahead and move on to Starbucks. Okay, so it's not just Starbucks this week. We're going to talk about Chipotle, Starbucks, and today Southwest Airlines. And one of the constants between all three is Elliott Management and Activism investors. So Starbucks announced that they were, and this Elliott had been working with Starbucks and had been accumulating shares up to I think it was 7% in shares, but an 11% economic interest in the company. And then they announced that the CEO is going to get switched, and they're going to bring, and not switch, but he's out, and then one from Chipotle is coming in. So if I'm looking at the natural progression there, this was all planned, of course. And that 7% that they have invested in stocks, I'd love to know now, it went up 22%, how much they have left of that 7%. And this is just what annoys the out of me about these activist investors. It always seems that they have this announcement that's, and I would have no doubt that it was both sides. The current board of directors and the ones they're trying to get on board get all together and say, hey, let's create this story that will drive our stock up. Hey, let's go find a CEO and let's make all this announcement. We'll all get 22% more in our stock profits, and then we'll all make money, and then we'll let it fall back down again to where it was before. Now, it has not fallen back down yet, but it has fallen since like I said, that's probably Elliott. If I had to guess, that's Elliott just cashing in those shares after just being around when that happened. And now today, Southwest Airlines, and talk about a really aggressive move. They are going to come in and fix everything. And not only are they, of course, have bought this stock, but they also want to take over the board of directors. They have 15 people on the board of directors, and I've never heard this before. They want to take out 2/3 of them and have 10 of their guys come in, and only 5 left of the old board of directors. I mean, I'd love to be inside there and hear the comments that are being spoken on both sides on this. Again, maybe it's just a parachute for those board of directors that are on it now, because they're going to shoot the stock up again, and the same thing's going to happen that happened with Starbucks, just because they say Elliott, that's going to automatically take everything up. So I'm so tired of the games. I mean, it's this M&A, mergers and acquisitions, the things that these funds do that just manipulate the market either way. So now I've got my frustration out, and Daniel, what do you have? And then we'll let Royce bring in what he has to say.
It's I mean, yeah, it's a whole, yeah, to your point, it's a series of sell the news events. You know, I mean, you got first Starbucks, and then announced a new CEO, and it popped, and Chipotle died, and then there was another. I've been trying to think about what it was. Just, I swear it was yesterday, that announced a new CEO, and it popped 20%.
Yes.
Then you got one. What was it?
I don't remember, but that's what's happening now. You're hearing it's like they all decided at once. Let's start doing the CEO thing now, just to drive drive.
And then just a few hours ago, like Victoria's Secret announced a new CEO, and their stock price shot 20-25%. So I mean, it's a sell the news event. It's all the narratives that you don't love.
Which is funny, because you said that, because I think Victoria's Secret was down 20-something% year to date, and all of a sudden this little news brings it right back up to even. It's almost like a chart that we might see that puts it right back where it was before all of it happened.
Well, just
I don't know. It's weird how that happens, Royce.
Just real quick, back to Starbucks. Like, yeah, I don't, I can understand why people are excited about this new CEO because of what he did at Chipotle and everything like that. This dude has his card stacked against him with Starbucks. I understand they have a massive footprint globally, which again is good,
especially in China. And
they've got a lot of competition in China. Then they move over to Europe. Europe has their favorite coffee brands, and not only that, but half of them drink tea. So then and the rest of them, that do love coffee, like you go to Italy and it's like Ely, or you go to like Sweden and they've got their own brand, and those areas, like, they have well-established childhood loved brands. Trying to break into that market is really difficult. And you go to China, and obviously they don't want some American company coming over and forcing their coffee on them, and the pricing model doesn't really work with everything in China being cheap and efficient, and that's just not really what Starbucks is. And then you've got the whole narrative of, with the economy weakening, how many times have you heard all these old folks on the news saying, well, if you'd cut out your coffee and avocado toast in the morning, then you'd be, you wouldn't have any of these financial worries. Like, the narrative has shifted so hard against Starbucks, very much unlike the situation that he inherited at Chipotle, because he inherited at Chipotle was just kind of a mess. It wasn't like people were saying, please stop eating Mexican food, or please stop going and ordering, $7 burritos. It wasn't anything against that. It was just they had done some, not so great things in the past, and it caused some food poisoning, and we're up against, lawsuits and
food poisoning between friends.
Huh?
I said, what's a little food poisoning between
right? Yeah, I mean, only food poisoning for a couple thousand people, and had to pay millions of dollars to rectify it, and had terrible brand marketing. And you remember the old South Park episode where Chipotle away, and it just, what he's facing at Starbucks is, to me, exponentially different than what he faced at Chipotle, and I think the reaction should be a little bit more muted than it is.
Well, it'll creep its way back down again. I mean, I'm sure you could probably, this would be a fun one to look at the charts and see where we think it's going to come back down and hit. And maybe we will in a future one, but it's marketing. You touched on it. That's what the narrative is, that he's going to bring all of his marketing expertise and do the same thing he did with Chipotle. And I just don't know. I mean, it's still expensive, and people are not getting any wealthier right now. Well, except for the top 10%, but everybody else is really struggling. And you're right. It's I'm going to make my pot of coffee at home or in the office because Royce is awesome, and I will not go to Starbucks on the way here. I don't care how much pumpkin you want to throw at me. I'm not going to Starbucks for
Pumpkin
that.
spice is right around the corner, brother.
That's what's funny. You know, the timing, that's what I'm saying, though. Look at this. The timing right as we go into the pumpkin season, which is the big thing for them. He's going to start off with that being his big first campaign is the fall pumpkin. And then everybody's going to say, look, see, he's already done it. He's already doing it. Anyway, go ahead, Royce. Anything to add on to that?
So I'm going completely 180 on you guys.
Okay.
Right? So with new leadership comes new ideas, right? Yes, coffee's been done all over, but what about tea? What about other hot drinks? They're more than just coffee and tea in this spectrum of things. If they can basically say, okay, you may not want to pay for this, but what about this? Or even do more baked goods or do more basically anything. If coffee is their main thing, what goes well with coffee? Accessorize. Like I remember, and this is a shameless plug, but not a plug. Nah, it's a plug.
We're plugging all day. Go ahead.
AutoZone, when you go into an AutoZone store and you're buying a part, the first thing they will try to do is what they call Whittaker. Whittaker means what it takes to get the job done right? Which means they're like, oh, you need this additional battery grease, you need these additional washers, you need these. Basically, they accessorize you until that $50 battery, you wind up with $20 worth of extras, right? And if he's a marketing genius, which everyone thinks he is, why not say, hey, you got this coffee, but you want a bagel, you want a muffin, you want a whatever, even those little cake pops. Have you seen the cake pops? They're cake pops that basically it's a cake on a stick, and they sell them for $3.
Yep.
And it's no bigger than a blow pop.
Yeah, exactly. Well, the margin. You talk about the margin.
But the kids go, oh, Dad, can I have a cake pop?
Yeah.
And then the parents go, well, okay. How many of you guys? All right,
there you go. Say that, Royce, because that's actually some of the whispers that they're saying is there's already going to be they're going to clean out the case, and that's where they're going. So it's funny that you said that because that is what the whispers are right now.
Yeah, because I'm like, if you have things to market that you just aren't marketing, market those things, try to get a little leverage on those. And basically, yes, it won't be a $7 coffee, but it might be a $3 muffin.
The other thing, though, Royce, is I was just going to say the other thing is unions. They're having to fight that right now. So we'll have to see how he does with that. The baristas their pay has gone up. So we're still going to have to deal with that labor wage that is in the whole formula, if you will, and the fact that they just have the quality of baristas and customer service is starting to go way downhill. And so, you mix all that in together. It's not just a mix thing. He's going to have to almost reinvent, I think, what they've got going there because it's becoming almost like a fast food environment, whereas before it was a nice cafe experience in the morning to get your day going.
Free Wi-Fi.
Yeah. Oh, that too. Yeah, absolutely. Yeah. And they even got very political too at one point. So it's like, man, if he takes all that away, then maybe he can be the quote savior of the second company.
We will definitely have to change the culture and try to get them to buy more in. But hey, Apple has done it year over year. Here's a lot. Here's some pods. Here's some accessorize. Right? Yes, we have.
Make Daniel smile again.
I get it, but like you're not like they have literally done all of the things that you've already said. Like they have tried all of these things already.
Yeah.
I mean, I've seen ad campaigns. I'm pretty sure they renamed some stadium again for Starbucks refreshers. I mean, it's not like they haven't pushed marketing everywhere, all over and everywhere.
That was brought up.
Drinks that they've had.
Yeah, energy drinks is supposed to be what they're going to push now. Energy, get you going in the morning other than coffee. So that's where they're supposed to go as well. But it's all these things they've thrown in there, I guess, that, Elliot may have had something to do with.
And as everyone keeps adopting crypto, I'm not saying that they're going to adopt crypto. I've seen several restaurants start to say, yes, we accept crypto. Basically, You get more of the millennials, you get more of the Gen Zs going, oh, okay, let me spend some of this over here.
But what's the value of that today? And is our program keeping up with how much it is worth today versus yesterday? And if you want a refund, how are we going to go back and find out what that refund is?
There's no refund. It's at the time of purchase. Don't try to complicate the world.
You know where I stand with Bitcoin and crypto. I'm one of those OGs. And I won't change. I won't change like Larry Fink does.
We're going to have to agree to disagree on this one.
I know.
Oh, I'm not trying to get agreement or not. I'm just talking about what they could do.
This show is about expressing your opinions, and that's what these are.
It's all it is, an opinion. It's an opinion.
And entertainment, right? Not always educational, but entertainment. All right. So
crypto is not money, or is it?
Let's not open that box.
Can we talk about tokens? No, let's don't do that. Let's look that up, guys, if you don't know what tokens is. It's a rabbit hole that you will be in forever. All right, guys, we are back. I think Daniel was trying to get in on us here, and maybe some guys from Asia were trying to. I think, what was that, a DDoS that Elon had an issue with?
Oh, yeah, it was only a couple of seconds. We're
I think we got a DDoS error because we're that important that they were trying to get rid of this broadcast. And we didn't even talk about that this week, but we won't.
Yeah, let's not get no
softball interview.
Well, we love to drop Elon's name anyway. Elon Musk. Anyway,
showtime.
He'll be on the show, maybe, possibly sometime. All right.
I'll give him a call. We'll see.
There you go. You got his number. Hey, Elon. He actually just put a big supercomputer here in Memphis. Hey, he can be close at any point.
We can talk about that later too.
There you go. We should make it a segment. All right, so we just talked about Starbucks and Elliott Management, and I went over and threw up, and then I came back, and now we're ready to get going on a little further because that's enough of activist investors for me for one day, maybe even for about 6 months. So let's move on to, again, I didn't write the show, but I'm following it. So the next topic is President Fed. And I think what Daniel was trying to get at with this is that there's been talk by certain candidates, Trump, that he wanted to basically, and I think he did this when he was in term before, because he was always, even though he's the one that brought Powell on board, he was always fighting with him over what he should do and tried to manipulate the Fed. I think the Fed tries to manipulate everything. Yeah, you heard me say that. And they jawbone and do a lot of things. And I've talked about this before, about the governors coming out, and then when the stock market's getting too high, they'll come out and go, but you need to watch out for this. And then when the stock market's getting too low, they go, well, I mean, we're looking great, and we're definitely going to hit all of our, we're just going to wait for some more data. It just really seems like this is happening. Again, this is opinions only, in my opinion only. And it just seems too timed for me. And anyway, so what was said is that, what should we do here? I'm of the, there's several other 3-letter agencies I wouldn't mind not having anymore, but the Fed, FED is one of those.
All right, fade to black again. I gotta go, guys.
We got rid of all the DDoS errors just so I can come back and get attacked again.
And bye.
Spicy.
So anyway, I'm not alone in this. There is people out there that say they really don't. They think the Fed. Why don't we do this, Royce?
Uh-oh. Yes, sir.
What is the purpose of the Fed, and do they serve their purpose? Whoops.
Yes, they do.
Okay. We're just playing a role here, point counterpoint. It doesn't mean we really believe any of this. This
is not popular belief, by the way. A lot of people believe that the Federal Reserve is actually a part of the federal government. That is not the truth. That is not a fact. The Federal Reserve are the ultra rich, and basically they lend their monies and their time and effort to banking as well as sovereign countries as well as leaders. But they have an interest rate that they're willing to lend their money at. And basically, what they try to do is make sure that at the end of the day, no matter what, they turn a profit. And there's nothing wrong with that. They're a business just like anybody else, right? So whether they serve their purpose is to make money. So yes, they definitely make money, and they try to make sure that people don't ultimately suffer in their making of money, right? So from the lower income to the middle class to the well off to the rich to the ultra rich, they basically say, okay, this is the way money's going. It's regulated. All of these things are going on to make sure that money keeps flowing.
So you included the lower and middle class in that comment there.
Absolutely.
I would take another possible look at that and say that no, just as long as the elite keep having money supply, that we'll let everything else work itself out. Because it's funny when they do these Fed meetings and Powell talks. If you notice when he starts off with his comments, it's always, we understand how much hardship the middle and lower class. He doesn't say middle and lower class.
See, they're considered.
He says we understand how hard this can be on some folks. Blah blah blah. It's like he always starts off with that at the beginning, and then I want to always finish those dots with. But we really don't care. The elites need to make their money.
Well, I will say this: it's not their job to police the lower and middle class. Basically, that's why there is a government, to have the subsidies and different things to offset monetary policy, which is one of the reasons we have so much debt, because the government's responsible. It's two separate organizations. One is basically governing how money is being lent out. The other is making sure that the people are able to live with how money was distributed.
The crumbs? Is that what? I think we had some politicians said crumbs. I won't bring up who. But I mean, who used to be over the Fed, or who? No,
Josh
what
is
was
dying
it?
over there.
There is a. I know. I'm waiting. I'm building him up, like Daniel does for me. So it just seems to me that Yellen and Powell are holding hands an awful lot, and they both have had this relationship for how many years, going way back, and it just seems like Treasury, Fed are Siamese twins, and they're not supposed to be. It should not be. It should be a separate entity. And I'm sorry, just I don't feel like it is. And if you look at all the banks that that benefit, if you will, from the endless money flow,
But that comes from quantitative easing. That doesn't come necessarily from, the Fed.
things they do that can affect all that, though. That between them and the Congress, it just okay, I'll stop there. I can see that. I can see the bankers getting really red faced, so I'm going to let him go ahead and release some tension and some stress. Go ahead, Josh.
I mean, I could hit on so many topics. I don't even know where to start. But I mean, it's a terrible loop, or terrible cycle of like the government lending to the banks, lending to the Fed, lending to, and then the people, and it's just this whole like circular thing, and all it's doing is constantly creating debt. And the only way to repay those debts is either from like a surplus, a default, or by inflating it away. And since
there's actually another way,
I know what you're gonna say, Royce.
Okay, go for it. What am I gonna say? Go for it.
Speaking of three letters, right?
I didn't say anything about three letters at all.
No. I'm talking about WAR, war, right?
Well, yeah, that is one way to fix it as well. But that just basically makes you're spending your money on something, so it pulls the economy up. But
war can erase some of the money, but it's not going to be like inflating it away. It's really just going to be like more government spending, which ultimately is going to create more debt, which is going to create more borrowing. And then depending on what the interest rates are at the time that we have those, that particular war, everything is going to be upside down, and it's going to end up resulting in the defaulting of things, but not in the way that, which is going to end up, bankrupting some. But
okay.
So funds have to pay the banks. I mean, the banks have to pay Wait, funds have to pay the banks back, right? Isn't that pretty much what would happen here? So we're going to lose a lot of banks, and the theory out there is that
You
it's
saw
working its way towards mega banks, which they're already getting there anyway, and they're all going to absorb all these smaller banks, and we're eventually going to be just like several super banks, and that's it. I mean, is that possible? Can that happen? Is that just a dumb theory or what?
Monopolies usually they don't allow that to happen.
Right. Unless there's no choice to
No.
save for the security of the U.S., as they always like. Janet Yellen likes to always say, it's in the best interest and the security of our country if we do this and this and this. See, now we lost him.
There you go. See,
That's
he's
funny.
not having any part of these shenanigans, and I don't blame him. I don't blame him.
Okay. He'll pop back, but go ahead. I mean, you were going to finish up anyway, and then when he comes back, we'll move on.
Basically, if you know how to do the shell game, and this is what it is, it's a shell game. For example, Japan has been falling for 3 years. If you bought basically at the very bottom of the fall, right, and can ride it up, you can literally offset your debt by what's accruing as it just comes back up to normal levels.
Right.
It's all about opportunity and opportunity costs. If you sit there and watch it go up and come down, then you waste an opportunity, right? But for the trillions and trillions of dollars that we have, if part of that debt was actually put into, for example, purchasing another country's currency that has then since then appreciated versus the dollar or versus what we were spending, then that allows us to pay back our debt without it just inflating away.
So this debt, and welcome back.
Thank you,
banker. We figured that when I said Yellen, you were out. So, but what was said is basically, here's the deal. Okay, so this debt,
yes,
who's it to? Is it to countries? It used to be China and Japan,
right?
That's
it. It's different economic policies, right? So, parts of the debt we're going to help. We have a presence in almost every single country in the world. The U.S. does. Right. Part of that is to support that presence in all of these countries, right? But part of it also is spent on financial stability for the country as well. And this is what you missed while you were gone, Josh. I was saying that basically, say, for example, we have $34 trillion in debt. Just a random number, just going to throw it out there. Let's say 1 trillion of that was used to buy Japan's yen at its lowest point. And it's been falling for 3 years. So that means literally as it just comes back up, that $1 trillion could be worth 3, 4, 5, maybe even 10 trillion as Japan just rights itself.
Ouch. 40 trillion on the way, debt. Watch for it.
So it doesn't inflate away. You can literally offset just like you get a loan from the bank. They don't know what you're going to use that money for. You can use it to invest. You can use it to do anything. If there's a return on that investment, use it to buy a house. Now you have a renter. That renter's paying you money and you're paying the mortgage. You will ultimately make money off of what you borrow.
But we're getting that money from
at a
the
much,
banks, right?
much larger scale.
Isn't the debt created? It's the money that's borrowed from the banks to do what we're doing or not?
No, that's what the foreign exchange is for. You're going to exchange $1 trillion worth of US dollars for $1 trillion worth of yen. And say, for example, the yen right now, I think it's 147 yen to a dollar. It used to be where it was only 70, 80, I think 95. So in that year and a half, basically it lost a third of its. So now if I picked it up at 1/3 off and just let it get back to normal levels, you should be able to make almost a 50% return.
But when we went through the great or the recession or was it the great financial crisis, did not J.P. Morgan pick up a lot of that? That a bank picked up a lot of the debt, so to speak, and was working in partnership to almost save the country when that happened. I mean, it seems like I've read that before. Maybe it was wrong, but to me it seems like the banks were
in 2008 was that globally the banks had all stepped in something, right?
Right.
And when that happens, it's like your currency is going down, my currency is going down, their currency. There's no good place to hide your money to allow it to appreciate because everyone's going down in flames, right? The fact that Japan is actually a giant beacon, if you want my personal opinion, because they've had 3 years of nothing but slaughter, it might be very good, basically, to offset some of this debt to potentially buy a bunch of yen, make the price rise from that purchase if America was going to do it, and then be able to pay back that investment because that's what it is. You buy low, you sell high. It to basically oversimplify it, and then basically once you're done, cash out, but you still have to gradually because you don't want to move the market.
Yeah, no quick fixes for sure on that. And look what we've dug, the hole we've dug ourselves between Congress and we'll throw the Fed in there and anybody else that's had a part of this as a
Yeah.
world. It's everybody's in on it, and it's just no escape from it. We try to be independent, but we can't be because we are everywhere. Our money's everywhere, so
Yeah, and
everything
just
that
like
happens is going to affect us.
yep, and just like with Brexit, I'm not sure if you guys remember Brexit or not.
Oh yeah.
Right?
That worked out really well.
The British pound went from $1.62 versus our dollar all the way down to $1 and has made it since then back up to, I think the highest is 132, which means they're at least 30% up from where Brexit was. I mean, Great Britain is 30% stronger just from where the ultimate fall was to where we are now without
Yeah.
doing much of anything, just investing at pivotal points when the foreign exchange is in their favor.
Good old euro. That's why you see separate reports and on the important reports each week. You have the Eurozone reports and then you have the UK reports. So
Exactly.
there's your division. Okay, Mr. Bank, I wanted to go in and out at my own leisure from this conversation. Do you have anything that you want to throw in before we move on to
most of what I was going to say goes back to the original point, but that
bring us back, please?
I was just going to say, the presidential interference with the Fed, and I can understand it from several sides. Like I don't want to say I wouldn't mind him having some sort of at least opinion on it or say in it. I don't want him to have any actual control over it, but I mean, you got to admit he's a brilliant mind. But the counterpoint is that there's really nothing that I can think of that has benefited from political interference. And especially when it comes to, an independent organization like the Fed. And then if you look at it historically and geographically, all of the other countries that have a federal, have their own version of the Fed that is independent of government agencies, there is overwhelming evidence to show that it is beneficial. Like if you remove political influence from that agency and let like the central bank or the Fed be their own independent entity, it is overwhelmingly better than the opposite.
Well, my thing, and I'll just wrap it up. My
Yes,
problem has
wrap it
always
up.
been, yes, my problem has always been that it's funny because the media is very careful. The financial media, especially, is very careful to say the Fed has nothing to do with the stock market, and the stock market has nothing to do with the Fed. Yet every single time, it has everything to do with both because and they don't want to say that, but it does because however the policy is of the Fed is going to affect the stock market. They say it doesn't, but it does because you can see the movements happen when things are
This is
said.
my Britney face.
Yeah, I know it is. I saw you shaking down there. By the way, you're not in the middle of the screen, but I saw you down there. I've got peripheral vision, and I can see things like that, especially if Brittany's on the screen. So, anyway, again, my opinion is they work together. So the stock market works with the Fed works with the stock market. Blah blah blah. That's not necessarily the case. It's just an opinion, and that's where we started too. Is when I said that I think these governors get paraded out and they make comments to move the stock market one way or another. Yes, Mr. Brittany, what was it you're going to say?
Oh, I'm just saying that you're I'm not gonna call you wrong. Wrong. No. Bigly wrong. No.
They wouldn't admit it if it was, by the way.
No. So there are governing bodies. There's the CFTA that governs commodities. There's SEC, which governs stocks. The Fed is not either of those bodies, right? And yes, their policy on money and interest rate and how it's lent out can impact people's opinion that may be involved in the SEC or CFTA, but not directly. So, like, literally, the Fed coming out and say, "Hey, we're going to raise the interest rate or we're going to lower the interest rate," shouldn't impact the stock market. Technically, no, at all. Because, at least in my humble opinion, as humble as I can be, right? In my humble opinion, things are it's already baked in. Just like when they say it's like, hey, that interest rate cut, it's already baked into the number. It's already baked into the system. And I know you've heard that before.
I hate that when they say baked in.
Before the announcement's even made, they're like, it's already baked in. That's why there was no reaction.
It's if they want a stock to move up, by the way, they say it's not baked in. But then when they want a stock to move down, they say it is. I mean, they use it both ways, just like everything else is a spin cycle. But yeah, go ahead. I digress.
Everything is heavily regulated to make sure that one individual player cannot move the market.
They're a team. They're not one individual player.
The apes this week. Never mind.
All right. Before we get interruptions and the DDoS, right, friendly waiver.
Maybe she's born with it. Maybe it's Maybelline.
They had a lot of that at Ulta. I stocked a lot of that. Didn't know what I was stocking at all. Fish out of water. All right. So the wager this past week to get the key to the executive bathroom it was KTOS, and it was brought to us by the banker. It was sponsored by JP Morgan, who said, hey, let's do a wager on Kathy Wood's KTOS. And it's a defense stock. Is that right?
Yeah.
Yeah. Okay. Which we'll get into a little bit next week. Daniel really wanted to talk about that a little bit and have fun with defense.
Have you seen it after the bell, guys?
Yeah. What did it do?
Take a look after the bell.
Further down? Don't tell me it went up because I'm gonna be mad.
Yeah, it's in your range now.
Oh, see, and it did that all week. It would pop up into the 20 to 22. In fact, I bet if we had a time lapse, it would show that it was in my channel probably 80% of the week. I could go back and look at it. I don't remember.
No, it was not in your channel 80% of the week.
Okay, whatever. So I exaggerate.
Not even close. I'm like, hey, it was there about 2 days though. I will give you 2 days.
It was there earlier today. It went up to
20, I know.
2026 or something like that, or something like that. And then, of course, at the end of the day, Royce went in and he sold some Cato stock, and it went back down below 20.
All day at least just winning shares to make sure.
Okay, so I'm gonna pull up the scoreboard here, and there it is. So let's look at this scoreboard. I'm looking at it. You guys are not. It looks like Josh's streak is over.
Yeah.
And we've had a man, what is this, 7-week in a row streak for the Apes? And we have 10 total wins. The guy that we've lost in Asia, he has 1. And then Royce had 5 in a row, so that's still the record. He still holds the record. I don't hold any records. Royce has 5 in a row, then he has 6, 7. So he's on the way back. That 7 puts him back ahead of Josh, 7-6. And I'm just back here way behind, saying like an Olympian in 3rd place. Hey, I hope I can catch those guys that are almost.
Yeah, these last 2 weeks are going to be important. I want to see what week 19 and 20 bring.
We have 2 weeks left, so I can't catch anybody. And then we're going to start over and reset, and hopefully Daniel will be actual participant in the future. So congratulations, Royce. You get to use your own executive bathroom once again this week.
Excellent.
We'll come back here. And now, Royce, Mr. Smart Pants, what are we going to wager on next week?
Good question. The
chart you already just did, or
no? So I did Ulta. I'm trying to remember. We had it at the beginning of the show. Let me go take a look.
We talked about Shopify, but we weren't going to do that.
No, Shopify is definitely
Right.
Shopify went up $10 since we talked about it, and I said that it was going to go up from last week's After the Bell. I'm just trying to remember. It was a $400 stock. I'm trying to remember what it was.
I think I'll buy 1,000 shares then.
Oh yeah, BOO. You're right, Vanguard.
That's
there
right.
you go.
That's right. ETFs, which you know I love so much. Let's let's make me look at an ETF all week, please. Go back to school, bro. I'll just pull it up now. I am at only 4. And
so I mean,
Josh
if you won the next 2 weeks,
I could
you would tie Josh.
Yeah.
Okay.
Yeah, if I'm being hamstrung like this, yeah.
But then we'll probably have Daniel. Well, that's what you get for winning 4 in a row. That's your fault.
That's what I get for YOLOing last week and betting on Kathy Wood.
Mr. Kathy, and it's spelled Cathie. Kathy Woods. Is it Woods
I
or Wood?
don't care enough to spell her name correctly.
I don't mess with you. That's what we're supposed to do on this show, is mess with each other. All right, guys. Hey, we've been going for an hour and 15 minutes. Man, we're going to have a lot of extra clips here. Hopefully, everyone had a good time and was
great.
Were you entertained? I hope so. We're going to see what happens. I mean, a lot could happen between now and next Wednesday. Man, really, really could. It looks like every week it's just getting up and up, and we're just waiting for that big something to happen.
That voodoo that you do.
Black Swan. Will a Black Swan incident happen in the next week? So
we already had one about 2 weeks ago.
Yeah. That was nothing. That was a blip on the radar. Yep, there you go. And you've been throwing that voodoo around, Mr. New Orleans. I don't know if I like that or not. It probably will work.
It does.
You too many people down there.
I had to do a couple of favors, but we're good. We're good.
All right, guys, let's get out of here. We will see you next week on After the Bell by Arbitrage Trade.
Later.
All right, later.
Adios.